Hello, hello, Sarah.
Hello, hello.
How are you doing today? It's just
The
us
original
two.
gang is back. I feel like I have not done one of these in a long time. I've been
Been
going through
busy.
withdrawal and missing it. I know I've been actually working, which is crazy.
Do you typically not work or?
No, it's mostly been because of the travel. Like I feel like it makes it hard to schedule this in when I'm traveling, and I've been doing a lot of travel lately.
A lot of traveling for customers, partners?
So one was a trip with my family to the East
Okay.
Coast. And then right when I got back from that, I had to do another trip to the East Coast for work to meet with customers. And there was a big childcare conference in DC. So
Yeah.
just, I'm hoping travel settles down a bit. We have the whole team, the most of the team coming out to California here. So that'll be good. They come with
Were
me.
were you speaking at the conference that you went to?
No, it was like a kind of first of kind uh, run by the US Chamber of Commerce with the Department of Commerce,
Yeah.
and, it was interesting because it was like this invite only kinda summit to talk about childcare and the state of childcare in the United States, and so felt like a big honor to be, didn't have actually a lot of private companies there with, a lot of, like, government folks or
Right.
nonprofits, so it was an honor to be seen as, like, enough of a player to get invited,
Yeah.
and then a lot of the speakers were, like, folks actually in the government.
Got it. Got it. Interesting. Yeah, I'm not a huge conference goer. I tend to think that they're kind of a waste of time unless you're speaking and trying to get like awareness for you've reached that level. Maybe you're a Series B company or a Series C
Yeah.
company or something like that.
It takes a lot out of me to go to these conferences, but I thought this one was valuable because it was kinda like the who's who of childcare,
That's
so
cool.
all the everyone who's making any kinda impact, like, was there,
Yeah.
and there was a lot of kinda hallway mingling, which I found more valuable than, like, sitting and listening to the government speakers, though I shouldn't say that on a public podcast, but I was actually hanging out in the hallway a lot, just trying to kinda catch people one-on-one and catch a lot of those, like, big names that I wouldn't normally get FaceTime with.
Right. Right. Yeah. That's important too. One of the first topics we had on here, I saw a really interesting tweet around the software developer positions from pre-COVID to now, and you see a really big drop off right before COVID when everybody was laying everybody off, and then a huge spike during COVID when the markets were roaring and this is the 0% interest rates and all this, and then I think uh, the baseline. I think it got up to from the baseline it was like 250% or something like that, and then now it's at 60% of what the pre-COVID levels are. So there's just not even like well, now it's 40% less jobs that are posted prior than to COVID, which I thought was kind of like the
Yeah.
normal time or whatever, I guess. What are your
Yeah,
thoughts
so
on
it's
that?
I'm just reading the chart, software development job postings on Indeed, which is
Yes.
a good measure because everyone kinda cross posts to Indeed
Yep.
in the United States, so this is US only, and
Right.
it is dipped, below the pre-COVID levels even.
What do you attribute that to?
I mean, I think it's all this belt tightening from there were some folks saying like, "This is AI taking the
Yeah, that's
software
not
engineers'
happening. Yeah.
jobs," which I think, cool future prediction, but that's not in practice, with at least with our software engineers, like, we have seen some gains and cool uses from AI, but it's not taken anyone's job yet. I would be very excited if
Yeah.
that were the case because engineers are expensive, but that's not, um, that hasn't happened yet. But I think, you see all the big tech companies are
Yeah.
belt tightening, doing layoffs, or, just not hiring at the pace that they were. So, the natural attrition also isn't getting replaced by
Right.
more hires.
Yeah, I totally agree with that. I don't think that. And I think a lot of companies are just being pretty cautious right now and still trying to preserve cash. I think it's still like the markets for venture still aren't they're definitely a lot better, but like there's not these massive hiring sprees. And so it definitely is like an employer friendly environment out there if you are hiring,
Oh,
which
yeah.
is nice if you're looking to hire people. I know that for what does some recruiters tell me? It's like 3% of people or something like that are getting hired, and the remote positions are even worse. Like they're having like tens of thousands of people like apply for these remote, even like software engineering roles and stuff like that. It's gotten pretty crazy out there and pretty brutal for people looking for a job, which is terrible. But as an employee, if you're hiring people, I think it's a really good advantage and probably should take advantage of it right now before it goes
Yeah.
back to the way it was.
We've definitely seen, like, just the caliber of candidates. We're not hiring for a lot of positions, but we did just hire for not a software engineer, but, uh, kind of a customer success type role, and the caliber of candidates is, like, amazing.
Right.
Um, and, then you're not competing necessarily with their offer in hand from, like, Google.
Yeah.
Um, so it's just easier to compete as a startup that can't throw, you know, a massive cash comp package at someone. Um, so it's yeah, it's a great environment right now for employers. But I imagine pretty tough on the candidate side.
Right. And this is also when you've been through a few cycles, right? Like a lot of VCs and founders, and you look at the companies that have been kind of created in these market downturns, and they've had to really like conserve cash, and the ones that have been able to even raise any money at all typically would probably be like the higher quality candidates. So like right now, probably as an investor is like probably the best time to be in investing, right? I think we're at like the bottom and only the best company is going to be able to raise any money. And there's so much talent available out there. This is the time where like you see like the PayPal mafia, like how did PayPal how are they able to hire that many amazing people, even though it was PayPal and it was started by amazing people? But like it's most likely it's like that was that was right after the crash of the 2000s where like there wasn't probably a lot of companies that had cash to be able to pay a lot of these people, which is really interesting. So I think like right now is like probably the best time to start a company. Probably as an investor, the best time to invest in companies if you can, if you have some capital to deploy. But it really does suck, I think, as an potential employee.
I'm gonna talk about something that isn't. It's kind of talked about in secret, but
Yeah,
not so much publicly on a podcast like this, but I feel the need to kinda share. I'm interested because this chart is United States only,
right,
and I'm curious what this looks like internationally. We've definitely seen, um, you know, some, savings to be had, and really talented folks going outside the US. Now, we haven't done that with software engineering. We're a pretty product and engineering driven company, and, that's pretty core to our business, so we haven't moved any of that out, but we were we needed a Spanish speaking, um, person because a lot of our customers speak Spanish,
right,
and we actually found that outside of the US and, like, really, really talented people outside of the US and, kind of not US prices in many of these markets. And, I was kind of sharing this with some other founders as kind of like, yeah, we hired someone outside of the US and it's actually been awesome, but like, I'm not sure if other startups have done this. And like, I was kind of overwhelmed by like how many startups are actually doing this, but not
right,
necessarily talking about it super loudly. But that's also, maybe a trend that's happening is like if you do have a remote company, there may be certain roles that you are comfortable filling kind of outside of the US.
right. Yeah, I definitely agree with that. I would say from this chart that probably wouldn't impact that chart as much as like the big cap. Like you
Yeah.
look at like uh the Nasdaq, like the majority of the Nasdaq is made up of tech companies, and like they're just like they laid off like 30,000
Yeah.
people. So I would think that that's the case, but I definitely hear a lot of people hiring internationally as well. I personally, and maybe this is just me, being like just stuck in my ways. That's just not for me. Like I want to have people in the office as much as I possibly can, and like especially if you're going to hire that, there's definitely roles that you could do remote, but like time zones are tough and like collaboration is really difficult as well, especially if you are like an early stage startup. Like, how do you like it's really hard to replace that. Even like the time zone thing is like really hard. Like you have if you're spread out across the US, you have like 4 hours maybe of like actual working time with your whole company.
Yeah, that's why, I'm a big fan of Latin America because same time zone, like it,
Right.
either same as Eastern time or kind of middle of the country time. Um, but that that eh, the international market is catching on to this, and like you're not gonna have like as massive a savings as someone that maybe in like Eastern Europe and kind of very different time zone, but maybe a lot cheaper. But I think it is like definitely something that I think startups are more amenable to. They may not be talking about it super loudly, but I think a lot of them are doing it for certain positions. Looking internationally, it can be a cost savings. And if you are remote or you have a remote kind of friendly culture, it may not be such a stretch to, you know, may not even necessarily feel the differences if everyone is kind of talking over Zoom anyway.
Right. Yeah, no, that makes sense. If you were gonna start a startup from nothing again, would you hire your first key employees remote?
So I feel like our philosophy is like the jobs that are remote really have to be like very, very clear. And like their role has to be clear, what you've hired them to do, what your expectations are. So it's hard when you're getting started,
Yeah,
and you're not even sure, what are the benchmarks and what do you expect from these roles. But when you're adding like, your maybe 3rd or 4th person in the same role, like, then you kinda know what to look for, and it may not be such a stretch, especially if you need someone that speaks another language, or if it's just very well defined what they're going to be doing. I
right.
think it's hard for and why we haven't really touched it for product and engineering because those roles, um, you know ambiguous necessarily what you're gonna be working on week to week. We need people that are really versatile, that are flexible, that are really collaborative and kind of feel really comfortable working together. Uh, but I know, founders that are doing it with their engineering team, and even, having like a fully remote product engineering unit. A lot of times those founders may have ties to a certain country or region. So
Right.
like they themselves, you know, if you're from a part of India and you know that there's really talented people there and you yourself are comfortable kind of going there or going back and forth, that's kind of a different case than, in my case where like I don't have ties to any region or know any particular region well enough to feel comfortable like going back and forth frequently.
Given how tight like the venture markets are right now, if you were an investor, would you and you had the exact same companies, one was all in person and one was remote, would that make a big difference in you deciding to
Yeah, I
invest
think
in
this is
them?
why like founders aren't talking about it because like a lot of times when a company doesn't make it and, we should talk about kind of exit paths,
Yeah,
you get acqui-hired and, like, you're just not gonna get the same valuation for folks that are international, like, it especially engineering, and so, like, people don't wanna to share that some portion of their team may not be based in the US because that's kind of seen as, like, less than, but maybe that kinda stigma is changing and, like,
but
as more companies.
don't you think that it actually rings true? Like I definitely can understand like if talent was a huge crunch, which it definitely was, like during like the 2022, right? And like you obviously, if you are the cost savings is undeniable. So like if you have to
Yeah.
have like a massive engineering team, like I think Rippling's team is in the hundreds, if not, I don't think thousands of engineers or something like that. Like that makes sense, but like doesn't really matter. And like, wouldn't you rather like don't you think you just have like a head start if you have everybody just be able to be together like 2 to 3 times a week? If you're being like really
Oh,
honest with
like,
yourself.
not talking about international versus not, but just remote only versus
Yes.
yeah, I think, you're hearing a lot of investors say, like, our bias is for teams that get together in person." And,
Yes.
I think that there is something to that, especially in the early days. Like, I don't know if Winnie would have started, been able to get its start if we had not started fully in person.
Right.
Um, but at the point we're at now, like, I don't feel a need to be fully in person anymore.
Right. Yeah, it'll be interesting to see. Look, there's definitely like a resurgence in San Francisco, specifically around like in person and AI is like taking over the entire city. The energy. I've met up with a bunch of people there. It's pretty electric. I prefer that myself. So
Yeah,
we'll kind of see what happens. But this is the kind of thing that you could do like once you're starting from scratch, right? Like you don't have any existing employees, obviously, you probably, if you hired a team and you scaled it in 2022, you're going to have a lot of amazing people. You wouldn't want to like lose them and all of this. And you have this remote culture that's working and all of that. But like, if you were going to start from like nothing again, I think that it's definitely, for me, it'd be hard to argue not to try to be more. Anyways, I know that you
right.
wanted to talk about like different exit paths for startups.
Yeah, I've been kind of talking, kind of almost like counseling people on this. And I think, I myself have kind of thought that there was sort of only one path and have
Yeah.
learned along the way that there's many paths. So I thought this would be an interesting topic, like where, especially a startup that takes some amount of venture funding, where do you go? Like, do you have to continue raising successive rounds
Right.
until you eventually IPO or fail? Like, are those the two paths? And I think those are the two that are talked about most, like you IPO or you fail.
Right.
Um, and I think there's actually a lot in between that can be really successful for individual founders, even if it's not the kind of standard VC route or the most
Yeah.
um, interesting from a VC's perspective. Um, one of those that I think we've talked about here is like private equity or growth equity. So you can kind of start on the VC train, but maybe realize that your company is maybe not growing 10x year over year, but has more predictable growth that um, you can kind of measure. And private equity really like that, and growth
Right.
equity. They like really measurable, strong, but predictable and not insane growth. And they like profitable businesses. And so like you can kind of hop from the VC path, which is like kind of maybe not so profitable, but really insane growth, to like
Right.
more profitable measured growth. Um, and private equity, as I've learned, can be sort of a range of things from completely selling your business to, taking investors that take a minority stake. And so you still have control, you still
Yeah.
run it how you want. Um, but instead of kind of reporting to venture folks, you're reporting to more of these kind of growth equity or private equity folks that have kind of different benchmarks for how they want your company to run.
Right. Yeah. It definitely went, I think, well, I think when everybody starts like a venture back company, right? Like everybody thinks that they're going to IPO and like that, like, and that's ultimately the goal, or maybe some more senior people. It's like, oh, we'll sell for 100 million bucks or $200 million to like our partners or competitors. So something like that. But there's definitely a lot of other, paths out there. But also the, those are not necessarily the ones that align with like your VC's interests. which I think like this is one of the reasons why we do this podcast. It's like for founders. It's like what is it?
Right.
What is a for founder like? A
I
VC.
could. Like, I mean,
It
early
depends
stage
on when they got in.
investors,
Yeah, depends on when
uh,
they got in.
especially like what I always tell folks as a rule of thumb is like if you've raised under, $5 million, like all paths are available to you. Mm.
Yes, they are.
And that might even be higher. Like you haven't really cut off anything, even if you've taken quote VC. Um, you could have a really great outcome for your VCs by selling your business or letting some growth equity firm buy them out.
Right,
And so the kind of your stake doesn't change, but their stake might change, the kind of shareholders you have might change. And they could get a nice markup for that and be very happy. Um, I think another path that I'm hearing kind of talked about, maybe not, I haven't heard a lot about this publicly, but there's also like the option to kind of buy out your investors,
right.
using either cash on your balance sheet or money you raise, debt financing that you
Yeah,
raised. And there's now kind of more and more, I think, folks that have vehicles kind of for this,
yeah,
for founders or kind of the management of the company to buy out your shareholders so that the remaining shareholders kind of own more of the business
right,
without so in like the kind of private equity or growth equity sense, you're giving them a share of the business. In like more of the debt sense, you're just owning more of it and kind of buying out someone's stake that way.
right. Why would you personally wanna do that?
So I think, it's something I've thought a lot about. Like as a founder or
Yeah,
CEO, like you have the most insight
right.
into how the business is doing. Like
True.
you know way more than what the numbers can say. Um, and you may have the strongest belief of anyone.
Yeah,
This is like really valuable asset. I mean, I feel that way about Winnie. I feel like on paper,
right,
we are less valuable than I believe we are, and we have the potential to be. Um, and some folks may want liquidity now, like they have reached the end of their fund life cycle
yeah,
and they need to return money to their LPs. They want the liquidity. Maybe you can give them some markup on their investment they'd be happy with, and it can grow much much bigger. So
right,
why not? I mean, like I think many founders would do this if they had the cash available to them. Um, and so, the fact that there's now like financing you can potentially even raise for this,
right.
interest rates are very high. So you
It's
have to have a lot of confidence in like how your business is growing and the cash you're generating because debt is debt. You have to pay it back.
yeah,
It's not like raising equity, like you are on the hook. Um,
right,
but it's a really interesting option if you know that your business is throwing off cash and that cash is predictable.
right. Yeah, and then it's just like a VC having a VC on your board and coming to your board meetings and everybody can see the writing on the wall. It's like this is not gonna be that like 10x like or that fund returner and all of that,
Yeah.
which like that's why VCs get in. That's how they make their money. And so like you're kind of doing a favor to everybody, right? Like a VC's time is very valuable. And they're gonna like they may actually influence you to do the wrong things to the business, to your point, like, you as a founder hopefully know, like, the most about the business and, like, they're not going unless they just wanna get out of the company. It's like, "Hey, have you thought about going the private equity route? Or have you thought about actually, like" I would be I don't know how forthright people would investors would be at the board level is like, "Hey, would you be open to taking this meeting with this debt provider to potentially buy us out?" I don't know if you'd ever get those conversations from an investor, but they definitely like if you've been in a company, say you've been at a company or you've been on the board for like 7, 8 years, and like there's no like path to like a larger acquisition. Growth is maybe like it's good, it's not great, and like the company's like profitable. Like, do they is it the best for them for the company And for them personally, and for you as a founder, for them to stay on the board as well, like, is
Well, a
it?
lot of times it's not even like a choice. Like when a fund reaches its fund life cycle, like you are supposed to return the capital. Like you are supposed to liquidate your investments and return the capital. And so, what's interesting is when I started this company, I didn't really understand that. Like I
Yeah.
didn't understand. I thought VCs were just these like overlords that have all this money. Like, no, they are money managers. They are just money managers. Um, and they are managing money for, say 8 years or 10 years on behalf of their investors. They're
Yes.
taking a fee for that, but they stop taking a fee once that fund reaches its maturity. And then they have to return the money, the
Right.
outcome. And so they really do want to like they sort of have to liquidate their position, or you see some funds like sell their position to other funds. That's
Yes.
kind of a thing that happens. And it's not because that's just the way their fund is structured. You see now there's some evergreen funds that don't have to do that, that can just keep rolling things forward. Um, one of the things I wish I had understood more about was just like, ask if you're going to take investment, like how is your fund structured? What's the life cycle? At what date are you expected to return capital? What happens if you don't? What's your plan there? To just kind of understand how the ownership of your company may change uh, if you kind of reach that point. And, I feel like I'm in a privileged position where we've been around for 8.5 years. So
Right.
we're starting to understand that now.
Yeah.
Because we do hear, funds reaching their life cycle. And it is interesting to have those conversations with investors and just try to understand, you know, what what is the ideal case for them? Are they trying
Right.
to keep rolling this? Are they trying to get liquidity? Um, so that we can plan to kind of get them what they're looking for too.
Yeah. And where you see this happen not so great is when like a VC doesn't have that conversation with you, and they have like obviously anybody on the board has an influence over like the CEO and how you're running things and everything. And maybe they are, maybe their fund is not doing well, and they need to actually show returns, or they get to the end of the life cycle of the fund, and like they need some liquidity, and like a bad actor, you would say, would not tell you that up front, and just like be like, oh, I think we should sell, I think this would be a good strategic time to do this or this. And so like you as a founder always need to keep like the company's best interests in mind, which directly like should align to you as the CEO or founder, and not get like stuck up in like the fund cycles, and like, or even people getting pressured because they get pressured by their LPs. They're trying to also raise more funds.
Right.
They're trying to show markups. They're trying to do all these other things. So they don't tell you any of this stuff, nor should you want. Probably that would just be distraction anyways. But like you should always be doing what's best for your company, and know that everybody, as much as you'd like to see that everybody has like common aligned incentives, that's definitely not the case. Especially if things are not going directly straight up into the piece.
Right. But it is like, kind of useful to understand, even if, you know, the incentives aren't exactly aligned. Like if a venture investor has kind of a duty to return money,
Yeah.
and you have cash sitting around on your balance sheet or opportunities to raise debt at like a good rate and buy out their stake, it could be a win-win situation. So,
Right.
it is useful to understand those dynamics because the equity might be incredibly valuable to you as a founder, and like
Yeah.
liquidating and having just cold hard cash might be incredibly valuable to
Right.
your investors, in a way that gives everyone kind of what they want.
Yeah. Yeah, for sure. Do you want to move on to that tweet that you pulled up?
Yes. Yes, so I'm gonna butcher his name, but Gokul
Gokul. Just call him Gokul. I know him
Gokul.
all. Yeah. Great guy.
Um, so I have to find the tweet now. Oh, here we go. Here we go. He said, oh, this is a very long tweet, but basically saying a huge percent of SaaS companies founded 5 to 8 years ago that got to 10 to 50 million in ARR are now building and upselling a new AI product to their current customers that will cannibalize their legacy product,
Yeah.
but that their legacy product's revenue will slowly trend to 0, so they kinda have to do this, and my favorite analogy is, like, the Netflix, like, they cannibalize their DVD business, with their streaming business, but they knew that DVDs were a thing of the past, and eventually that would go to 0 whether they innovated or not. Um, and so this is kind of what SaaS companies are doing with this AI transition. Um, I don't know, what's your take on this? Like, have you seen this? Do you think this is really happening?
I haven't seen any specific examples of this. I see a lot of SaaS companies that are bolting on features and like companies that have like a lot of data. So like you see like Box or Notion or whoever that it's like, hey, now you could use the large LLMs to basically query all your data, and like they bolt that on and offer for free, but they probably are not going to be able to charge you more for something like that. I can't think of any specific
Yeah, like, I'm
com
thinking, like, HubSpot that we use, and,
yeah,
like, they've too, like, bolted on some AI features, which are, like and, like,
they're
they're
nice,
not
but
charging extra for them, and,
no, they
like,
can't.
I
Yeah.
and, well, they actually did gosh, now I'm blanking on the name. They acquired some company, and, it's kind of like this AI based, it tells you information about people who visit your website, um, and they were trying to upsell that to us. We tried it out, and it wasn't really a great fit, but, um, I don't know, like, I'm seeing a lot of companies try to bolt on AI, but I'm not yet seeing it be at the quality that's, like,
No.
worth, necessarily paying for or, gonna take over their legacy product. I feel like this is a little bit of, like, almost VC speak where VCs are, like, really bullish on AI, but in practice, like, we're not yet seeing, like, that the products are quite there yet.
Yeah, I think that, there's some really impressive well, you look at OpenAI, what are they at, a $3 billion run rate? Like, there's obviously something there, like,
Yeah.
even just for the consumer use case, right? So that, and, Perplexity and, like, all of these other, kinda consumer-based, just knowledge searching across the web, like, that definitely like, is that gonna cannibalize Google eventually? Potentially, but I think that Google's point in this tweet is just like you need to really think of like what your existing product is, and if this transition, like I think we're at the very early stages of like what AI, like we have a good foundation of what you could build, and there are going to be companies that are probably going to go out of business if they don't adapt to what is going on, or they don't bolt on certain things. Like you could definitely see like think of like all of the, document management companies, like, I don't use, like, this searching for specific knowledge across, like, all your company's domain, like, if you have it in, like, Notion or Google Docs or something like that, like, I could definitely see if, like, one of those companies offered it and, like, the other ones didn't, like, you could definitely maybe see people transitioning to this other company, but I think we're probably a little too early to see your entire, like, 50 $10 million to $50 million ARR business just go down to 0, but they're definitely I could definitely see this happening. I would say that even more so what I'm seeing is that it is so I think we're getting to a really big saturation point in SaaS, and I think that that's even, like, coming like, the huge mega cap companies are obviously, like, they're more valuable in the public markets than ever, and they're just, like, taking off, but, like, the SaaS companies, like, there's so many great companies out there, and the multiples, like, they're at, like, 7 or 8 times, earnings, and, like, that is like, record lows, and I think that it's just because it's pretty, like, in comparison to 10 or 15 years ago, it's pretty easy to create, like, a SaaS company, and now there's, like, the go-to-market motions for, like, all these different, types of customers are, like like pretty easy to replicate. So like I personally have an opinion that like the SaaS companies in general, they're kind of getting saturated in the majority of industries. And I think it's just super hard to compete. Like how many different notions do we need? How many different like think of like the sales tools that you have or the marketing platforms like how many more of these things can there be? Like, they're all kind of chasing after the same dollar and spend, and this is also why I continue to stay in logistics because I think that that is a huge
Mhm.
untapped market, and, like, there's just not a lot of people playing in it, and it's gonna have its time that it's
Right.
there's gonna be a massive disruption with technology, but, like, everything that like other B2B businesses that are technology businesses that are using it, I think there's just a massive saturation point in this. That maybe AI is a part in this in the future or right now. I don't know. I don't know what your perspective is on this. You're already
Yeah.
in a marketplace, so you're safe.
Well, yeah, I mean, I think that's why, like, as we get into kind of building more SaaS type tooling for the childcare providers, we do see that there's lots of SaaS companies that sell to childcare
Tons.
providers, but there's no market. And so we think that's like a huge differentiator for us and why we continue to invest in our marketplace and kind of see the SaaS tooling as more of a commodity, but one that like
Totally.
we should probably still have some tooling there.
Right.
Because they use it and they, take advantage of it. But yeah, I mean, I think I've just been like I still see just a huge disconnect between what investors say about AI today and what's happening with AI today and like the and I do believe AI will get there. Like a lot these
If
tools will get there, but like I just it's frustrating because I'll hear things like, you know, this tool is going to change everything. It's an outbound sales caller, this or that. And then I actually spend time setting it up, demoing it,
right.
getting the sales pitch, and like it's completely useless. And then I also like as a consumer, I'll use these like websites that have these like AI chat bots bolted on. I'm like, damn it, I miss the day when you could just chat bot an actual person that could like look up your case file and respond. This was like circular, like you can
Yeah.
tell it's a bot because they're just talking in circles rather than like actually doing anything. So it's just frustrating right now, the stage we're at. And I know it'll get better, but I think, you know, it's a little like there has to be some recognition right now that it's not quite ready for prime time and like we're still operating businesses in the meantime. They don't expect us to like have kind
Right.
of replaced everything with AI right now.
Which is maybe an argument for like now is the time to be building those types of companies because like if something's already happening and there's already massive companies, like you're too late to the game. You need to start a company when it's the right time. And maybe
Right.
now AI is far enough that you could actually create an application based on the all of the fundamentals and the building blocks of all of these large language models and all of the other toolings that like you're going to be able to create an actual like outbound sales tool or like I think of like a yeah, like a customer service manager, like the next gen, like Zendesk. Like
Right.
I can imagine that is going to get like 80 to 90% like automated away. Like now that you could actually like a computer is able to interpret what you're asking it for, and it has access to all these the data and all that type of stuff. Like I could definitely see it. So maybe now it is the time that we've now went past the cool tech stuff, and obviously it's that's still evolving to now it's like, okay, now we're at the application layer of like, what are these AI companies actually going to do? And then you are going to have like a full outbound sales team of these AI
Yeah.
people, these SDRs and all of that stuff.
Yeah, and I'm like, great. When that's ready, I'll use it. But like, don't tell me it's ready now and waste my time.
Yeah.
It's not ready. And I'm sure very smart people are working on it and have very impressive demos to raise capital, but like, it's just not ready for prime time.
Yeah. That's definitely true. I, what do I use? Yeah. I use Chat GPT.
Yeah,
I
I
don't
use
know, a few
ChatGPT
times
all
a
the time.
week, maybe now.
What is it?
I probably use it like a few times a week.
Yeah, yeah,
Um,
I do. But it's I kind of look at it as like another kind of Google search, like it's part integrated into my workflow,
Yeah.
um, and very useful.
Yeah.
But so far I haven't like had a kind of tool like that that I use every day.
Well, I wanted to ask you, I don't know if you had time to think about this. This last question. Um, and maybe you just think about this for a second, but like, I don't know, we were going through, it was just, it's just me and Sarah today. So we were trying to figure out some topics to go through. And, one of the ones is like, what is like your biggest lesson that you would have that you know now that you wish you would have known when you started? Like, for you, Sarah, it's Winnie. Um,
Yeah, I mean, I think the what I was kind of already saying about understanding how VC's business model works,
yeah,
understanding that business before taking that money is really critical. Understanding the fund life cycle, you know, what kind of returns they're expecting, like,
yeah,
all of that, the timeline would have been just so useful instead of kind of doing catch up and trying to figure that all out now and a little bit kind of, I wouldn't say too late, but we didn't plan for, uh, but that's more on like the kind of financing side of the house. And the other kind of feedback I always give to founders, is like up to 5 million, just don't worry about it.
yeah,
Don't worry about it too much. It's really when you start taking more than that, you take growth rounds that you really need to understand what returns your investors are expecting and when. Um, and so, maybe I wouldn't have need to have known that like right when we were getting started, but
right.
waiting 9 years to really figure that out was probably a mistake.
What
Um,
would you have done differently?
uh, I don't know that we were necessarily in a position to do a lot differently. I mean, one of my biggest other regrets with Winnie is just not making money sooner, or
Right,
not trying to make money sooner. We spent a long time not having any way that we monetized and just saying, like, we're not going to worry about it. We're going to build the marketplace. And maybe we needed that many years to build our marketplace, but
right.
also maybe we didn't. Like, maybe we could have tested into some of this stuff sooner. Um, and then, we would have had more once you're generating revenue, you have more options when raising capital. And so
Yeah,
it was probably all combined. Like we didn't have necessarily all the options available to us, because we weren't generating revenue. So we really just had that venture path based on these big bets and these big returns. Um, but now, like if I ever become a second time founder, I don't know that I will. Still got a lot of work left to do on Winnie. I think I would look into, maybe bootstrapping the business and other kind of ways to fund.
do you get frustrated that like your sector? I don't. Your sector's never been hot in VC world. Is that a
Mhm.
frustration of yours?
There was like a few minutes there where it was hot. We didn't really benefit.
Was it?
But,
Okay.
there were like, I mean, there are some companies in the childcare space that have received a lot of funding.
Yeah.
Um, Bright Wheel that sells childcare
Right.
provider.
Yeah, that's right.
They're, doing quite well from what I hear, and they've raised, successive rounds of funding. There's other companies that are not doing quite so well, but have
Right.
raised significant capital. There's been some big acquisitions of legacy players like ProCare in the space. So I think, it's never been like AI levels of hot, but there's been hotter times and less hot times. Um, and I can kind of see like when there's sort of hot times or other companies getting financed, there's suddenly more interest in Winnie. Um, but some of that interest may just be like trying to learn about the space.
Right.
Like
Yeah.
we're helping them do their research so that they can invest in well.
Those are always fun calls. It's
Oh
like,
yeah.
thanks for wasting my time. And
The other thing, like I think, we often are like, "Oh, VCs, like, it's so tough to have VC investors." Like, I will share the other side, which
Yeah,
is that, like, VCs can really help accelerate your business,
of course.
and one thing I felt having not raised VC in a very long time and sort of been on this profitability path is, like, we are sort of getting left out of some, opportunities, I would say, like,
Yeah,
uh, press opportunities. We don't have being named VCs necessarily throwing our hat in the ring constantly to write about us or talk to us. Um, and I think, there's something to be said for like when you
right.
do have a lot of people that have invested a lot of money in you, they're really, really motivated to get you out there.
Yeah,
Uh, and when you don't, you're kind of left to your own devices. And like, if you do have a small team that's focused on profitability, you may not be focused on like getting yourself out there and marketing yourself all the time.
right. Yeah, it's, yeah, it's tough not to be the hot company. I've definitely had both sides of that, and neither both have their ups and their benefits and drawbacks as well. I was thinking about this too. I think my biggest lesson is like just to how long of a process it is. I definitely got caught up early on, just especially being in San Francisco and like meeting so many smart people and other founders that had successful exits, and it just seems so easy. And like you just kind of think that it's just like this just happens, and maybe you're around a lot of lucky people but the reality is it's not. Like the reality is like a success like a $1 billion company, the average age of a founder starting it is I think it's 44 years old. Like, that's the reality. It's not like in your 20s and you're gonna go and you're gonna IPO this company, but, like, that's all you hear. And also for me, I was around a lot of these people, and then I had a super hot company with Shyp, and I was like, "Holy shit." So, like, my ego got so inflated, and, like, it was, and we had the growth to back it up early on, and we had the investors, and we had, like, every TechCrunch article and all that shit, and, like, that was it was good for me to, like, fall down from the graces, but it was extremely painful, and now looking back at that, and just now being able to reflect to be like, "This is a long fucking journey. This is a really, really hard thing," and just don't sweat the small stuffs, small stuff, even if your company fails and all of that, like, you could start another one, or you could do whatever. There's so many different things that you can. I also have a hard time separating myself, like my identity from the companies that I run, and I still have that same problem.
Yeah.
I wish I didn't, but that's just who I am, I guess. I don't know. But it fucking sucks. It'd be nice to be like, well, it doesn't matter if this thing doesn't work.
Right.
But I think that may be one of the reasons that people can be successful, but it's just a long fucking journey, and, like, none of this shit happens overnight, even though that you see it's like even the stuff that, like, I see, like, a lot of friends that will have they're like, they just built this AI company, and they just, like, raised a $50 million Series A, and then you hear all the stories from them from, like, how hard it actually was for them to even raise it. Like,
Right.
they get asked all the same questions. It's like, how is Google not gonna kill you? How is my
Right.
like the open AI not gonna kill you? All this stuff, and it's like they talk to like 50 investors and all of that. Like it you only see that all of the good stuff, or the really terrible shit that happens. Obviously, the press will sensationalize any of the terrible stuff, but like it is really fucking hard. Like and it does not get easier. And
I
I
mean,
think
that's why I also think, like, don't put your life on hold. Like, I had
that's a
3
great point.
kids and I'm doing the things that I want to be doing at this stage in my life. I'm not
Yeah,
waiting until we've made it to the next stage. And I think if you're not doing that, it's like, it's hard to continue on doing the same thing for so long. And like
right,
the reason we've been able to do this for 8.5 years is like I am living my life at the same time and doing all the things I
right.
want to be doing had I, IPO'd, whatever it might be.
Yeah. Well, maybe there'll be some jets in your
Sure.
trips if you
Yes.
IPO'd.
Yeah, exactly. Like, I'm doing it on a budget, but I'm doing it. I'm living life and I'm, not, and also, like, pay yourself so that you can, you know, live life in a reasonable way without, feeling like you're in poverty all the time. I didn't pay myself in the beginning and for a long time, and I think I really that was bad.
Yeah.
I'm glad I pay myself now. Not as much as I should, but I pay myself, something.
All right. You wanna wrap up on that?
Let's do it.
All right. Thanks everybody for listening. We'll see you next time, maybe with some more people.
Yes.
All right.
All
See you,
right.
Sarah.
Bye.
Bye.